Hey guys, welcome to another Damilola Forex Academy video. On today's video, I'm going to be showing you guys a step-by-step multi-time-frame analysis approach that works very well, and I assure you, you can be able to make numerous amounts of pips and numerous amounts of profits using this particular approach to the market. As you all know, I trade the market using a top-down approach, and it allows me to keep consistently making profits, and I'm able to go onto the bigger time frame, see a big picture of what price is doing, and come to the smaller time frame and pick an entry. So it's a very beautiful approach that I want everyone to sit down and learn, so that you can also go replicate it and also make numerous amounts of money from the market using this particular approach. Let's go, guys. This is how I analyze using this multi-time frame analysis and approach. I'm going to refresh your memory on what chart structures are. This is because chart structure is the basis of my multi-time frame analysis. And it's important that we all understand what chart structures are and how I'm able to use the knowledge of chart structures to be to my advantage in trading the multi-time frame analysis. Okay, first of all, we have two types of chart structures. We have the bullish structures and we have the bearish structures. The bullish structure is a combination of higher highs and higher lows. And the bearish structure is a combination of lower highs and lower lows. That is, when candlesticks form into higher highs and higher lows, that is a bullish structure. It lets us know that, okay, prices is trending upwards. While if we see prices making structures, if we see candlesticks making structures of lower highs and lower lows, it lets us know that what price is bearish. Okay, so how do I use the knowledge of chart structures to my advantage? Okay, it's important to know that I'm a reversal trader. So what do? I look for a violation of structure to pick my entry. For example, here we can see prices making consistent what? Higher highs and higher lows. Okay, so I'm going to sell this trade when an higher low is broken. So this lets me know that what? Instead of prices to continue making continuous higher highs and higher lows, prices violated the structure by closing below the higher low, now making a lower low. This lets me know that this is an opportunity for me to sell. I can sell immediately prices closes below the higher low and put my stop loss above. And if I am in the overall direction of trend, I will take profits at the 100.0. That is the beginning of the structure. That is the beginning of the fractal of that particular structure. I can take profits if I'm in the overall direction of trend. While what if I'm not in the overall direction of trend, I'm going to take profits at the 61.8 of the low point right here to the high points. Okay, this is because if I am trading a retracement, it has let me know that what, okay, if I'm trading a retracement, then the maximum price can get to is the 61.8. That's the 61.8 of the low point to the high points. But if I'm trading the direction of the trend, it has let me know that what, okay, prices will not only get to 61.8, but since it's the direction of the overall trend, price is coming to the overall 100.0 right here. That is the 100.0 of the beginning of the bullish structure, or the beginning of the fractal that was violated. Okay, if you want to know more about fractal, I'm going to pin a link to the video above so you can go and understand fractals more. Okay, so for the bearish structures, here we can see prices making consistent lower highs and lower lows. Where am I going to buy? I'm going to buy after prices violate a lower high. That is, I'm going to buy when prices closes above a lower high, letting me know that price has created an higher high. Letting me know that what the bearish structure has been violated. that particular fractal of bearish structure has been violated, let me know that what it's an opportunity for me to buy, put my stop loss at the low, and if I'm in the overall direction of trend, I can take profit at 100.0. While if all of these movements are just a retracement, the maximum I can go is the 61.8. So it's important to understand this because this is the foundation of our multi-time frame analysis. That is, we go on to the monthly, to the weekly, and see the overall direction of prices, or even the daily, see the overall direction of prices. And when we are picking our entries on the 4 hours, 1 hour, or maybe 30 minutes, we know that, okay, this particular price, is it making a retracement or is it the direction of trend? Okay, so whatever the overall market direction tells us is what we are going to do when we pick the entry on the smaller time frames. Like I said, if we're in the overall direction of trend, after a violation happens, we sell or buy to 100.0. Why? If it's a retracement, we don't go beyond the 61.8. Okay, so this is the basis of it. So let's go on to the main charts, and I'm going to be showing you how to use this explanation right now of chart structures in analyzing the markets and using it onto our own advantage. It's important that when analyzing using the multi-time frame approach, you understand structures, just like I've mentioned, and you know the overall direction of prices from the monthly, weekly, and daily, and you can be able to go from your 4 hours down to your 15 minutes to be able to find an entry for prices. Okay, so on the monthly time frame right here, we see prices making push, exhaustion, push, exhaustion, push, letting us know that what this is a bearish structure. And any buy that we are picking, that is, for example, here a buy at maximum, you take profit at 61.8, and at 61.8 you look for a violation of structure, a violation of the last higher low, and you can be able to sell down to 100.0, since the bearish structure is our overall direction of prices. So any buy that we're picking at maximum, for example, this is a lower low, any buy that we're picking at maximum is to the 61.8. That is, any buy trade we are picking, maximum is to the 61.8, knowing fully well that what price is moving on lower highs, and this potentially will be another lower high. And what at once we exit our trade at 61.8, we look for a violation of the structure that took it to 61.8. Once the structure is violated, we sell down to 100.0. Okay, so now let's go ahead and bring our Fibonacci out and see if price has already gotten to the 61.8. Okay, clearly at this point, we can see price is currently rejecting a 61.8, letting us know that what, okay, like I said, any buy we're taking, the max is 61.8, and at 61.8, we'll be looking for a violation of structure for us to sell down to as low as the 100.0 right here. Okay, so let's go ahead and look at this market from the weekly time frame. So this is how we break the market down, like you've seen from the monthly. Now we are at the weekly. So at the weekly, for the same fractals, remember that fractals is the size of the structures. Okay, you don't put two unequal sizes together, except you are going from a small fractal to a big fractal, but you cannot go from a big fractal to a small fractal. You have to be able to separate them. Okay, so for the big fractals, we saw price making push, exhaustion, push. On the big fractal, price is currently making an exhaustion. Okay, so now the structure that took prices up to 61.8, that is from this low to this high, will be violated when prices breaks this higher low. Okay, so when price breaks this higher low, then the structure that took price to the 61.8 for a retest has been violated, and price has transcended into this bigger fractals. That is here now, at the break of structure, you can be able to sell, put your stop loss at the high, and sell to the 100.0 because that's direction of trend. But usually when a break of structure happens, a lot of times, about 80% of the times, we see a 61.8 retest. This 61.8 retest can provide us a better entry for a good risk reward. So at 61.8, you can sell pinpoint at 61.8, put your stop loss at the high, and let prices fall down to the 100.0. Okay, so that is what, after a break of structure, you can sell pinpoint after it breaks the structure, or you can wait for a natural 61.8 retest that happens, even though not all the time, for us to now sell pinpoint at 61.8, put our stop loss here, for a better risk reward than just selling at the break of structure here with our stop loss here. But either ways, it's fine. It's just all about risk reward. Okay, so right now, our tradable area right now, since price has not violated this structure, our tradable area is within this low to this high. So this is what we are going to go down to our daily time frame and trade within our tradable area until prices break to that low. Okay, so with our tradable area, we saw prices make push, exhaustion, push. And we saw prices break a structure right here. Prices broke the last higher low, direction of trend clearly without any iota of doubt. Price is coming to the 100.0 right here. Okay, so but like I told you, after a break of structure, a lot of times we see what is 61.8 retest of the violated structure. But the 61.8 retest, we are going to use whatever fractal of this bearish structure is violated is where we are going to buy to. But the max is 61.8, and at 61.8, we can be able to sell straight up at 61.8 and put our stop loss at the high and sell down to the ground level here. Okay, so before prices transcended into this big fractals, prices made small fractals. Okay, what were the small fractals? First of all, let's identify this big one. This is push exhaustion. For these big fractals, this was the last higher low. Then price started with small fractals of push, exhaustion, push, and broke the fractal of the small structure right here, letting us know the direction of trend. Price is coming to 100.0 here. Okay, so at 100.0 here, prices now broke below this structure. Price now broke below the 100.0 and now transcended fractals into these big fractals of push, exhaustion, push. Now broke. So the break now made it transcend fractals into these big fractals, letting us know that just like it did before, went to the 100.0 here, like right now, price will be coming to our 100.0 here. Our only job now is to see if we can be able to get a buy trade opportunity for us, because selling here and putting our stop loss at the high and selling to this place is going to be a negative risk reward. It doesn't favor us. So our job now is to see if we can be able to get a buy trade to 61.8, so that 61.8 we can be able to sell, put our stop loss at the high and sell to this low level here for a better risk reward. Okay, so now this structure, this bearish structure that took prices down, will go ahead to the daily time, we'll go ahead to the 4-hour time frame, and we'll see if there's been a violation of this structure, which is going to help us to be able to pick trade buyers better. Okay, so even on the daily time frame, we can still be able to read the structures, even though we'll go down to the 4 hours to read it better. Okay, on daily time, can see price making push, exhaustion. We can see prices making push, exhaustion again, and push, exhaustion. This is the last higher low of this particular fractal. Okay, because after that higher low, we see prices start making moves on smaller fractals of push, exhaustion, push, exhaustion, push, exhaustion, and here we see prices break a structure right here. Now, the structure that prices broke is not the overall structure from here to here, but instead the structure from here of this fractal here, from here to here, that is here to here. Why? Because from here to this particular point, prices was on smaller fractals than these previous fractals. You can see these fractals are bigger. Push, exhaustion, push, exhaustion, push, exhaustion. Fractals literally mean the size of the structures. Okay, so the size of the structures that price was making here are bigger than the violated size. Here we can see prices make push, exhaustion. These are very tiny fractal before price now made this push, exhaustion, and now violated the structure right here. So the violated structure is the small fractal that was violated. Okay, so letting us know that if we're bringing our Fibonacci, our take profit is going to be at a 61.8 of this high to this low right here. So fractals are very important. Once you understand fractals, that is the size of these structures, your exit most especially is going to be pinpoint and it's going to be accurate, and you will not exit at a wrong place because of just your lack of understanding of fractals. So our take profit is going to be at the high to the low. Remember that any buy we are buying is a retracement. No influence that once we buy to a 61.8, we can be able to sell and put our stop loss at the high down to the 100.0 right here. So knowing fully well that since this point, since prices broke the structure at this point, you can actually still sell here, put your stop loss here, and what exit at this particular low. But we as retail traders, we're smart and we're trying to take advantage of a buy trade to 61.8 off the broken fractals before eventually selling from that place down to the ground level for our take profits. Okay, so now we've seen a break of structure happen on the daily time frame. So let's go to the 4 hours and let's read the structures again of the violated fractals. Okay, so just like we saw here again, we can see prices making push exhaustion, then push exhaustion and push exhaustion. These are bigger fractals, okay? Because after these big fractals, price started moving on smaller fractals. So let's go ahead. Let me zoom in a bit. So after the big fractals, we saw prices move on smaller fractals. Okay, so again, these were the big fractals, push, exhaustion, all of this were the push, the exhaustion, the push, the exhaustion. All of these were the big fractals, which have not been violated. The structure that was violated is push, exhaustion, push, exhaustion, push, exhaustion. So this was the particular structure that was violated. You can see prices was moving from a small fractal here to this big fractal here, and push. This was the break of structure that happened at this point. That is what prices broke. Instead of prices continuously moving on lower highs and lower lows, prices broke and created an higher high. Okay, so now after a break of an higher high, what do you know? We know that okay, the fractal that was broken is fractal from here to here, letting us know that the 61.8 is here, and this is where our exit is going to be for a retracement. Okay, so what can we do? We can buy pinpoints at the break of structure, put our stop loss to the low and buy to 61.8. Or another thing we can do is at a break of structure right here. Remember that after a break of structure, something like this, break of structure, 80% of the times we see a natural 61.8 retest. At times, prices extends beyond 61.8 and goes to as much as 80.0 or 90.0. But notwithstanding, what we do is after a break of structure, like I said, you can buy pinpoints or wait for a 61.8 retest. When price gets to 61.8, buy pinpoint at 61.8, put your stop loss at the low and take it to your extended take profit. Buying at the 61.8 gives us a better risk reward because we are buying at a lower price point from where prices initially broke the structure. For example, let me bring the Fibonacci out here and see where our 61.8 is. Okay, so this is where our 61.8 is, providing us a good opportunity to buy, even though right now price is trading below 61.8, but it doesn't really matter. At a break of structure, we'll buy at the 61.8 retracement and we'll put our stop loss below this low right here and we'll buy to our take profit. So prices sometimes, like I said, extends below or beyond 61.8, but that is all right. Our stop loss is still intact and absolutely nothing is going to take our trade out. So it's gonna be a fantastic trade. And even right here provides a very good opportunity. You can buy here, put your stop loss at the low and take profit at this point. So you can see how this particular strategy provides us with very, very good opportunities. Right here, let's see our stop loss. Our stop loss will be over 70 pips, about 80 pips, and our take profit is going to be over 300 pips, probably around 350 pips. This trade should give us a decent 1:4 risk reward. And it's a beautiful trade. The entry is right anywhere around here, anywhere around 61.8 is perfect for entry. You can enter, put your stop loss at the low and buy pinpoint to the overall 61.8 of the broken structure. It's a fantastic trade and we're going to make very good amounts with this particular trade. That is, if we're risking $10,000 on this trade, we should be going home with about $40,000 on this particular trade. Okay, so thanks guys, and if you want to learn more about how I trade, the link to my Telegram is in my bio, and you can follow and hit me up and I'll be here to teach you every single thing you need to know about the top-down trading methodology. Thank you guys.